What's up YouTube, it's Louis here bringing you today's cryptocurrency video on all the cryptos that I cover. So it's a bit of a different one today. I'm just going to go through all the cryptos in order, all in this one video. Sorry if you can hear any background noise. I am outside in the garden. It is cold, but I just want some fresh air to enjoy. Yeah, the fresh air and listen to the birds, as you can hear as well. Perfect. Let's get into the Bitcoin update. So of course we measured from this swing low to this swing high up here. We wanted to retrace to this white box, this golden pocket. This is the most retraceable levels of the Fibonacci, and so this is where you should bounce off if we're just using the fibs as usual as a retracement tool. You've come up, retraced, corrected before continuation. Now when you lose that 0618, there's a higher chance you create a reverse wave, especially if you lose that 786, which of course we did a lot of the time. You do come to the 786 bounce, and two things can happen from here. That's when you get rejected, create that reverse wave, or get back above, confirm their support and continue. So that basically means that this move to the downside, because we come back up, confirm that support, was a fake out. But in this case, no fake out here. You did create the reversal wave, you did come to your minimal target, the 1. And basically when you lose the 1, your actual target is the 1618. Now just because it's your technical target does not mean you have to go there. Just like with any target, like let's say a W pattern, we know that with a W pattern you have a neckline, and if you break above it you validate the pattern to its technical target wherever it is. But if you were to lose that neckline, you invalidate this target up here. But if you get back above and confirm it as support over here, then you would be valid again to go to that. So it's all about invalidations and validations. It's all about fake outs, market manipulation 101. So of course once you did lose the 1, your first target would have been the 1.272, and I gave you guys all of these technical targets. I always tell you in the videos, once we lose this, we go to this, where you could bounce and get back above the 1. If you confirm it's support, we're good. And right now we've basically technically done something like that. We've bounced off the 1.272 exactly, and you can see I'm not playing around with the fibs. I put it on the exact points over there and over there, and you can see the bounce was exact, like to the dollar, 39,583. Amazing bounce back above the 1. What we wanted to see then is the 1 confirm the support. Now if we take a look and zoom in a little bit, you can see that we did find support below the 1, but on this trend line. This trend line is so significant, guys, because you can see support, support, resistance. This was the larger falling wedge resistance point, and your support would be something like this basically. So you can see we've now broken out, back tested support, then you fell back in, found support on the inside. Because you broke back into a bullish pattern, technically speaking you should still break out bullish, of course, unless you lose support, which we did. But we closed back inside, and now you broke out of the falling wedge, and you have back tested it as support, and we're starting to go up. Now in 2 days ago in the updates, I was basically talking about the EMAs. Once you get above the 20 and you can confirm that as support, bearing in mind you break above this, then your technical target would be the 200 EMA. And I was going through examples of that. So as long as you can get now above that 55 EMA, confirm its support, we will be going to that 200, wherever that may lie by the time we get up there. Now that could be the 0618 at 45.6k or 46.7k at the 050. We don't know how low this is going to come by the time this comes up, because of course it looks all good now. Like in your head you're probably picturing just going up vertically, but let's be honest, we know that's not how Bitcoin likes to work. It likes to consolidate, drive everyone crazy. As we know over here, everyone thought this was the bottoming out structure. We thought that we were going to hold this. Everyone thought that this was accumulation of it. It still is, but we thought we were going to stay above this support. But we were always reminding ourselves of that this wick could have been filled, and the wick was now filled, so we don't need to worry about that. I know everyone's going to say, what about this wick down here? Not every single time a wick will get filled, just a lot. Obviously on the higher time frames, when we looked at Bitcoin, we saw multiple times the wicks getting filled here, 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 and all these wicks down here were getting filled, especially these larger ones over here. So that was why we were thinking that potentially, even back here, we were thinking that we would potentially fill in this wick, and we've done that now. And you can see we low down on the white box at the 1.272, slightly higher than that, because this is just a bit below. So technically speaking, even with the wicks, you got higher lows, so it's all good for continuation. Now let's go back to the 4 hour, finish off the Bitcoin update. We know hold this as support, we're going to here minimal, which we're on the way to now. Hold that as support, we're going to the 200, wherever that may lie at that point in time. Of course, what we need to worry about, not worry, but remember, is that when we come up to this high, we could get rejected here and form a double bottom. So this would be one bottom, neckline would be here, or wherever we start dropping from, and then the second bottom over here. That's a potential scenario, and I'll explain to you why. So over here we came up impulsively and corrected down, correct? And then we noticed that this over here was a falling wedge, and your technical target for the falling wedge is back at the top of the wedge, and you see you came up all the way to the technical target, you met it up here, and you rolled back over, and we thought that this over here would be the double bottom, but technically speaking this could be the double bottom. One bottom, neckline, second bottom. But in the second bottom we could be doing the same thing, where you've come down, you're retracing back to that top bit, and then you roll over for a double bottom. I'm going to show you another scenario where this has happened before, and this was back in May, June, July time. So yeah, we made a high over here, started consolidating, came all the way to the lows of the range, came back to the top of the range, met the technical target like almost exactly, and then rolled over, formed another double bottom over here. So this is what we need to watch out for. This can happen again. Of course, if we were to lose the one, which is probably going to happen if we form that double bottom, technically speaking you are in a target to that 1618, but bearing in mind, as long as you can hold support, which is obviously this wick and the bodies up here, as long as you're closing above this wick, we won't roll over more. Basically the 1.272 should hold. Now of course we need to bear in mind, yes, wicks tend to get filled, so if we were to roll over, potentially, yeah, 1.272. Now if we were to lose that 1.272, then yeah, we would be looking at these other targets. Remember, on the monthly time frame, if you're watching my previous Bitcoin updates, that's where the 20 monthly EMA is, on this support, resistance, support, and that's why we were looking at that 37.6k area, just in between the 1618 and the 1414. But you might not even come to there, guys, to be honest. You might even just come to that 1414. It depends how things want to move. When I made the video, this wasn't even here, it was slightly below or in line with it. Now it's slightly above. So just before we finish the Bitcoin update, we obviously have this inverse head and shoulders that we're talking about. First of all, we know we're retracing back to this green line, but will we roll over from there? We have to take a look at that. But of course we have this inverse head and shoulders, something that I was calling when we were in and around down here. I said we're going to come up and form a right shoulder. I didn't know exactly where, but we've done that now. You got a shoulder, head, and then a shoulder over here. I know this line's in the way, so just try and ignore this line at the moment. We're looking at this purple line. Shoulder point, head, and then the next shoulder. You broke above it, basically validating the pattern. Now let's get you your technical target from the bodies back to the resistance point. Put this on the breakout, where it broke out, over here. Yeah, and your target would be 44.4k. So of course this is above that resistance point. We need to bear in mind that we might not meet this target, especially if we get rejected here, which would be us getting rejected by that 55 4-hour EMA. So even though this is our target right now, I'm showing you why we might not meet that target. Basically, even though yes, we've broken out of an inverse head and shoulders, we need to bear in mind that this high could basically send us back down. So of course, looking at the head and shoulders, let's say that we don't get rejected here, we do meet this target, we would then need to fall back to this support, which is also the 55 EMA, and then we would go to the 200 EMA. That is Bitcoin for now. Let's head over to Firo next. So Firo, we know what's going on. It's also in a falling wedge. Falling wedge, descending channel, same thing. So you broke down, you broke out of it, back to set support, and you met your technical target, $6.50, something that we called exactly on the channel. Now the same thing here, you have a falling wedge, you have gone lower, but your technical target is $6.50 because that's the top of the wedge. Now you can see that we were respecting it exactly. Let's get this line for you exact, because it's been moving a little bit since I last made an update. So I'm actually going to leave that there. So we had a few fake outs, so back tested support when you came back in, back tested support when you came back in. So a lot of market manipulation here. Resistance, support, 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 with multiple fake outs telling us that we were below support. We wanted to go below support, but the bulls were too strong for Firo, that the Firo bears couldn't take power. Basically the bulls came back in. You created some sort of double, well, quite a few double bottoms here, even one here, but that target has been met, like a small ascending triangle over here. We also have another double bottom over here. You can see previous support became resistance, and now you're above that. This is the thing with Firo, because it's a micro cap, it always likes to do gaps in the market, and I don't like this. Like, and especially candle openings can be weird. So for example, that candle that closed there, this green one that opened up here should have opened up here. So it's a bit weird in that sense, but nothing we can do. Let's get this technical target out of this double bottom for you guys now. So that would be your neckline, bodies to the lowest bodies to back to the neckline, and you are in a target now to roughly $4.85. So we're literally 1 cent away. So yeah, I can't say technical target, Matt, can I? But yeah, so obviously now we have a gap. You know what might happen. We're going to probably fill that in. What I don't like about this chart is that you've broken the 55 EMA, like with a gap. So technically speaking, you're going to fill in that gap, probably lose that 55 EMA again, confirm it as a double brick wall. So if we come back below, just like this, if you come back below, fall below, confirm the EMA as resistance again, we're going to continue lower. Look, you lost the low over here, you put in a new lower low. So technically speaking, the same thing should happen. Now, we have to bear in mind we are above that 20 EMA now. You have an amazing bullish hammer on the 20 EMA, exactly as support. You were below this support, and the balls push you back above this support. So it was resistance at one point, you didn't confirm it as resistance, but now confirmed support. So technically speaking, if you can now get above the 55 EMA and confirm that as support, we should minimal go to that 200 EMA, and that's roughly sitting at $5.32 now. Just because it's there right now doesn't mean it'll be there by the time we get up there. Of course it can be, but we need to bear in mind that a lot of the time when this takes long to come up, this will come down a little bit. So it could be that even though it's $5.32, it could be $5.30 or $5.28, for example, something like that. We can't say exactly right now, but because you have broken out this falling wedge, your target is $6.50. So that's what I would be looking at long term. In the short term, we could get rejected over here, and this is where you could fall back for support. This will be a nasty resistance at first, but as long as we're above this low down here, we're good for continuation to our $6.50 target. Break back into the pattern. Obviously, you would be using this as resistance, the 55 EMA. We would need that 20 EMA to hold. Lose that 20 EMA, you're basically using both EMAs as resistance, and so that means you're in a downtrend, and so you should be putting in lower lows below this. What I do like though is that you have been holding the 1.272 just like Bitcoin. You've had a nice bounce from it. You almost came down to that 1414 at $4. You just failed to meet it. We have sort of printed an inverse head and shoulders here, but it's the same technical target for the double bottom. You got a shoulder, a head, and a right shoulder over here in the same sort of area, left shoulder, right shoulder. So that's good to see. Double bottom, inverse head and shoulders, same technical target. So we're 1 cent away, or 1.5 cent away now. So if you were now to come down, lose the one again, lose that 1.272, put in a lower low below this, we would be coming to the 1414. But technically speaking, your target is that 1618. And if you've been watching my previous Firo videos, you would know that this purple line is also, if we go to the weekly, a much larger 618 over here. So that's why where the 1618 is landing. This is why I've been basically calling for this white box to hold, and we've had a little wick off there. So nice bounce. We need to start heading back up. We need to close obviously above that $5, basically above this white box, which we're in at the moment. So as long as we can close in this white box at the end of the week, we should be good basically. So let's move on to the next crypto. Let's take a look at Quant down here. Now, what is going on with Quant? Let's go to the 4-hour time frame. So what's the 4-hour telling me? Okay. So the last time we made a video, sorry about all these fibs, but last time we made a video, obviously I gave you this target to downside, target met, we got back in. I said if we were to lose it again, we're going to roll over, and then we put in this low over here, lower low, M pattern as well, one top, second top, and then we had a neckline. We broke the neckline. I gave you the technical target before we lost the neckline, and our target has been met. You did wick down obviously to these lows over here, but you haven't closed bodies lower than my technical target, so the technical target has been met exactly. Now let's get rid of these shitty lines on the screen. So although this is the M patterns neckline, now it also is a double bottoms neckline potentially. Can you see here? One bottom neckline, second bottom maybe. So yeah, one bottom here. Well, we can't give you the technical target out of it yet. If this is the lowest point, yes I can, but we don't know if that's true, so that would be hopium, because we haven't had the second bottom. Who's saying this is a double bottom? It's just a potential double bottom. So if you were to lose this low right now with a 1414, I would expect Quant to come down low, of course, to that 1618. And I think I have a another fib level here, yeah, from swing low to swing high, this impulsive wave to the upside. Of course you want to hold that 618, which we were at, then you lost it, came to that 786, confirmed that as support. Now if you can get above that 618, you won't create that reversal wave. If you fail to get above it, which over here you had a fake out, you have confirmed the 20 as resistance, so technically speaking you should put in a lower low. A lower low would be losing that 786 because that's where the bodies are sitting. So if you lose that 786, we are talking about a $157 quant coin, so that would be the 1 level. If you can come down here and double bottom, look guys, you don't have to come down here, I'm just getting you ready for these scenarios. If you lose this low 786, you will be coming to there because we're using the fib levels to find support and resistance. Now if you were to come down here, two things can happen. First of all, you can bounce straight back up, break these high points up here, create some fat double bottom. But if you were to lose this, we would be looking at these targets down here, which I've been calling on the channel for a while. If you lose certain supports, I'm never saying yes we're going to hit, I'm saying if we lose support we will go to hit, if we break resistance we go to hit. So hope you understand that. At the moment I do like, obviously 1.5 out or almost 2 hours left. Well, obviously we can't make a judgment on the current candle, but right now to me, if it were to close as is, it's looking like a spinning top, which is a bullish in this case because you come down, a bullish reversal pattern, so we should be coming up. Now that if it is to close like this, potentially this was the low bottom, and so your technical target would be this back at this swing high over here at the 0618 at $177 per quant. So that's what I'm seeing at the moment, not much else. Of course, if this is a double bottom just here, you would be breaking this, and then you can see that you might be forming a much larger double bottom like this, with this being your neckline, second bottom, and out of here. Remember, bear in mind we still are outside of this ascending triangle, so technically speaking we are on the target to the downside. To be honest, I've completely forgot what the target was. I'll get it for you quickly. Yeah, so your target is the 139, the 1618, which we've just been talking about. So that's why we need to watch out for this. As long as you're above that 1, there are chances you get back into this ascending triangle. Of course, if you were to lose that 1, we're coming to the ascending triangle's breakdown target at that 1618 at $139. That is Quant. I hope you enjoyed that part. Let's move over to Elrond. What's Elrond saying on the 4-hour time frame? So I think we had this descending triangle. We now have met the technical target. Last video I was like trying to get away with saying that was the technical target, but really it wasn't. So I was like, if we do put in a lower low now with wicks or bodies, then yeah, that would be meeting the target, and you can see the target has finally been met. Exactly. And since then you've had an amazing bounce, breaking out of this double bottom over here, getting above those EMAs, which is amazing. Because let me explain what was meant to happen here, something that I've just said in the other parts of this video. When you come up to the 20 EMA and you get rejected here, this is a continuation of a downtrend, so technically speaking we should see lower lows and lower highs. Now you did try and make a lower low, the bears push price down to here below this low, the low of it, the body close and the wicks. You did put in a lower low price wise, but only with the wicks. Now you didn't do it with a body candle close, so you haven't technically put in lower lows. So this is positive because you were down here, bears pushed price all the way down here, you wanted to close down here, but out of nowhere the bulls stepped in, pushed price up. The Elrond bulls were like, no, we love this price level, we're not going below 180, we are now going up from here. Push price up, boom, spinning top, now we're going up, bullish reversal candlestick pattern, the spinning top. Doesn't matter if it's red, doesn't matter if it's green, it's a bullish but not bullish hammer, bullish spinning top. Some people might say it's a hammer, you can say what you want, they mean the exact same thing. So for me, I'm seeing that as a spinning top because we have wicks to the upside over here. Now of course you reversed, you broke your neckline of this double bottom, you're now validating this path to the upside. So let's get your technical target. So it would be from the lowest body back to the neckline, and then obviously you've broken out now. You're finding support on that 141, working your way back up through the fibs. Obviously we would like to get above the 1, because obviously getting above the 1 is telling us that we won't go to these lower 2 targets, because you did break below that 1618, correct? So technically speaking, if you confirm that as resistance, which we couldn't, we should have carried on rolling over to 2414 potentially. You couldn't even meet the 2 target. There was crazy support here basically, and now you're coming into that 55 EMA. We could get rejected here. We should, in my opinion, I would like to. Obviously, you have at the moment over here, honestly, and then you have found support on the 1414. So we're technically bouncing between the 1414 and that 55 EMA, like very tight support and resistance. I think it's only $5, yeah, $4-5 support and resistance. Rollover from here, I need to see that 20 EMA hold, because if you were to lose that 20 EMA like this, confirm it as resistance, then that is our continuation of the downtrend, because this here is our double brick wall and this is our continuation trend line. So yes, we're above the continuation trend line, we should continue up. That's why we've come up to this, we were continuing up, but this here is the double brick wall. If we get rejected, I'd like to find support back here before break of it, confirm its support, and we would be going to that 200 EMA. That is currently sitting at 244, but by the time we get up there, it might not be at 244. You can see when we were down here, it was sitting at 249, and then obviously up here you're sitting at 244. So maybe it'd even come to that 786 or $240. This is what we need to bear in mind. Basically, this is what we need to look out for. So that's what I'm saying right now. Get above this, confirm its support, we will be going to that 200 EMA, and this is why you should have all three of these EMAs on your charts. Now your target out of the double bottom is 219. But again, if you lose support, you invalidate it, and because you'd be below both EMAs, all three to be honest, you should be continuing your downtrend. But we've seen over here, when it should have done that, it couldn't, and you put in higher lows and now higher highs. So technically speaking, as long as we get a higher low, we're good to make a higher high, and our technical target of that next impulse would be this, basically $219. That is Elrond. Let's go to Matic Polygon. So I was saying a good few things about Matic and Polygon. First of all, we had this head and shoulders over here, technical target met, boom. Once a target is met, you want to form a new pattern, and we started doing that, but you did go lower first. Now we're creating this double bottom over here. We have broken out of it, potentially you even met your technical target, but what I do like right now is that you're back inside of the rising wedge. Now I know, yes, you're back inside of a bearish pattern, so technically speaking you should break out bearish, but let's pray we don't. Of course your technical target is right down here at 68 cents, but from any of these lows you can bounce from. So from 68 cents you can bounce, get back inside. You can bounce from $1, get back inside. You can bounce for $1.55, which for me is the most significant level of this bull market for Matic. As long as you're above this, we're going to our high targets up here, these green lines. As long as you're above that 0.618, $1.55. Of course you came back to $2 exactly, a nice psychological level. You did have some wicks below, you did go below, and you did close below, but you never flipped $2 into resistance, and this is amazing to see, guys. I think when I last made the Matic video, we were breaking out here. I said we need to come back to find support on this. Obviously you didn't do that, you came for support and you lost it, but you came, once you lost this swing high, which we wanted to see turn into swing low, it means that, okay, obviously you've lost it, now you need to find where is it going to go to next. Now if you lose a swing high, you go to the swing low, and that's why we held that swing low exactly as support, which is also a larger 0.786, and this is why I've put this area over here of the $2 to that 786 zone, and we held that nicely as support, got above the $2 level and confirmed that support again, started heading up. Now, oh, let me move that actually. Now we've got this double bottom over here, neckline broken, technical target potentially met as well. Let's just double check that for you guys. So lowest body close to the neckline, and of course put that on the breakout. Technical target has been met. We've now run into that 786. Now you can see on the 4-hour time frame we're potentially going to get a bullish cross. What would be even more amazing is after this bullish cross, getting those EMAs above that 200 as well. Now that would basically mean price action is above all three. Well, it is above all three EMAs, but wouldn't it be nice to see all of them doing their crosses, basically the 20 and the 55, the 20 and the 200, the 55 and the 200, and all of them, yeah, just all of these EMAs getting back above that with that bullish cross. That'd be lovely. Now we need to fall back to support. For me, as long as you're above that 20 EMA, which is currently sitting at $2.20, for me, as long as you're above $2.20, we should see continuation to the upside. Now let's get rid of this at the moment. which was that 786 target at the, oh no, that's over here, but let's get rid of that at the moment. We've measured a long time ago once we got this 13th of December bottom. Swing high, swing low. We measured a dip to get a technical target of the next impulsive wave up. Now you came up, ran into that 1.272. You didn't meet your technical target at the 1618, $3.31. You rolled over, and I was telling you guys, as long as we are above that golden pocket, we are going to this technical target. Now, of course, over here, you lost this golden pocket, negative. But I did also tell you guys, if you don't break this low down here, you do have chances of then getting back above that 0618 and going to that 1618 target. And we've done basically what I've said. Now, of course, we're not in the clear yet. We have broken back above this golden pocket. Very bullish, because this is creating that reversal wave. What do I mean by that? Well, we measured a dip, correct? And so what should happen here is you've come down impulsively, and you should start correcting up to the 0618, the most retraceable level, before continuation. This is how the fibs should be used. But we know another way, when it's you're using it as a reversal tool, and that's when you break above that 618, creating that reversal to minimum the 1. But our target is the 1618 up here. Now, you didn't meet that 1618. You came back to find support on the golden pocket. You lost the golden pocket, but again, as long as we stay above 0 down here, as long as we stay above 0, there's chances are we could potentially get back above the golden pocket. Now, what we need to see next is for it to confirm as support. We haven't done that yet. However, it's a first step in the right direction. We are now, technically speaking, going to the 1618. $3.30 is now valid again, as long as we can now come back to support, form the bullish cross, let those EMAs cross, and then hold that golden pocket. As long as we can do that, we are now back in a technical target to the 1618 at $3.31. Now, that is it for Matic. Let's move to the final coin, Hbar. What is going on? Hbar has actually been respecting the TA a little better than the Matic Polygon coin. However, it's doing the same exact thing. We measured a dip from the swing high to the swing low down here. You start coming up. So what should have happened here is you come down impulsively, correcting up to the 0618 before continuing down, retracing. This is what you're doing here, retracing to key level on the fib level, on the fibs, before continuation, putting in that lower low, continuing your downtrend. However, you can invalidate this, and how is so? You need to create a reversal wave. By how? Breaking above that 0618. You did get above here, confirmed the support, lost it in the meantime, but as long as you're above the 0, there's chances are you could get back above it. You did. Obviously confirmed their support just there with the wicks, and then that puts us in a technical target to the 1618. Something I've been saying as well from the 13th of December down here, or 14th of December, sorry. And this is what I've been shouting to you guys, and I said as long as we're above this golden pocket, we are in a technical target to that 1618. And you can see here, we never lost the golden pocket, so it would have been wrong, even when we were coming down here, and even when we put in a lower low, it would have been wrong for me to tell you guys, yes, we're going to lose this low down here. We're not going to the 1618 again. We're not going to 36 cents. That would have been wrong, because technically speaking, you're still above the criteria of this golden pocket to get to this level. And that's why I never back down from that. And obviously at the moment, it's all good signs. Yes, we can get rejected here. Yes, we can still lose this. Yes, we can lose the 0, invalidating this completely. But at the moment, I'm going to say what I see, and at the moment we're still above that golden pocket, which I've been talking about for so long. I'm probably boring you with this golden pocket nonsense, but here's the cryptos trying to bore us out of it. But we know as long as we're above certain supports, we're good for continuation, and we've double bottomed at that golden pocket. Amazing signs. You're above that 0618, you're above the golden pocket, meaning that 36 cent was never ever invalidated. It's always been valid, even coming down, putting this ABC correction here, that ABC, still valid. So can't say anything else other than we're still going to 36 cents. But yeah, let's look at this double bottom over here. So that's your neckline, this is the lowest body close, put that on the break over there, boom, you're going to run into that 200 EMA, actually going to run into 29 cent, but yeah, by the time you get up there, that 200 EMA would be there. As long as we now then, if we get rejected where we are now, or if we get rejected up here, As long as we're holding support above that 20 MA, we're good for continuation. Now, if you come up to that, lose that, confirm the 55 support and the 20, then we should be putting in lower lows, because that's the continuation of a downtrend. Just like here, when you got rejected, you should have gone lower than this. Yes, with the wicks, but the bulls were too strong. They did not want price down here. They didn't want price below this low, basically. They didn't want price below 25 cent, which is our golden pocket. Ah, nice. So long as we're above that, we're good for continuation. 1618, 36 cent. The bulls were like, we want to go to 36 cent. We are not going down. We're not losing this golden pocket. And that's why the bulls stepped in, created a spinning top, and that's why from there you did break the 20 MA, confirm that support. As long as we confirm that support, we're going minimal to that 55. Break that resistance, confirm it as support, then we're going to the 200. Basically, this is how we trade, and this is why I want you guys to use these 3 EMAs. They're so key to my trading. So of course, if it's good for me, it's good enough for you guys. Perfect. Let's help this channel get to 1.5k subscribers this month. We can do it. Our target was next month. We can do it this month. You guys are the greatest community. You've always been patient with me. I know I've been busy over these last week or so. I've just been trying to sort out a house. Obviously it's all hectic and whatnot. I have to get new stuff for it because there's nothing in there. But yeah, maybe if you guys let me know down in the comments if you're interested in obviously seeing other sorts of videos not to do with crypto, then let me know in the comments below. Obviously I know you guys just want to know the TA, but if you're interested in my life or whatnot, maybe I could post videos on other things. So please like the video, comment if you want to see other sorts of videos apart from crypto, and of course subscribe. I'll catch you guys in the next one, and as always, peace.